A year ago, Dad, Ernie Garcia, the father of the CEO of Carvana, cashed out for $3.6 billion. Now, Dad, Carvana is not even a $3 billion company. They're not even a $2 billion company. Their latest earnings came out, and it seems like the Carvana experiment has failed. Let's break down the earnings and help everyone understand what's going to happen to the used car market as a result.
Are these Ernie Garcias or earning Garcias? And, I'm looking forward to the day when I can sell my stock in YAA and collect $2.87. But the Carvana experiment seems to be failing.
And Vroom and Shift and this whole online sight unseen used car thing, it's unwinding.
Well, it had a growth spurt. And then I think to a certain degree, reality set in. Prices continued to go up. Inflation reared its ugly head. Interest rates are going up. People are finding that, some of the cars aren't what they're purported to be. And there's just been any number of issues with Carvana, Vroom, and Shift in growing their business and doing it in a way that, comports with what states want for titling and registrations and things like that. But Carvana's issue, more than anything, is that they've paid way too much for quite a bit of their inventory. And because sales have slowed down dramatically and gross profit per vehicle, the retail side of things, gross profit in the second quarter, I believe, was almost $1,800 per car. And in the third quarter, dropped to $1,100, a little over $1,100. The total gross profit, including financing, is about $3,500 per car. So
and extended warranties and things like that.
Things like that. But it seems to me that they've decided, we're in the used car business, but we're only in the used car business so we can be in the financing business.
And that becomes even more clear when you look at the vehicles Carvana has had to wholesale. They make $448 on vehicles. They wholesale significantly less than their peers like CarMax, for example.
They were making $8 something.
So the real issue here is, and it doesn't take two guys on YouTube to make it clear, Carvana overpaid for used cars in an effort to continue to grow. And look at their growth chart. I mean, of vehicles that they were retailing, Dad, it was only back in the second quarter of 2016 that they sold 4,355 vehicles.
Wow.
And then in the second quarter of this year, it was 117,000 vehicles. So they had to buy cars. Sadly, though, because demand has, I'm not going to say sadly. Not going to say unfortunately. Demand has gone down.
Yes.
Because used car prices were and still continue to be ridiculous. Carvana only sold 102,000 cars. And they're holding on to 100,000 plus vehicles. And they really can't afford to not sell them, but they also can't afford to sell them because their whole model isn't predicated on wholesaling them to dealers. They're just going to lose a ton of money that way. They need customers to come and pay these crazy prices and buy warranties and get financing through them. And if they don't do that, then they're screwed. Be like Mark and start saving hundreds of dollars on your maintenance and repairs, or like Rich, who saved thousands annually on his insurance. Simply join YAA Plus, the only membership that saves you money on all things auto. Head to joinyaa.com/plans and use the code YouTube to save 20%.
So just holding on to the inventory, hoping and praying that there's enough stupid people out there to pay those prices.
Do you think we'll see really significant price cuts at Carvana on the retail side? Because again, they make $1,131 when they sell a used car. They make $3,500 total on the financing, the insurance, etc.
Which, by the way, is down about $1,100
significantly.
Yes.
So do you think Carvana will ultimately end up decreasing the price of a lot of their inventory to get retail customers in to try and make the $2,500 on the back end of these deals? They have to eventually, right?
Well, you would think that would be the intelligent thing to do. But Ernie Garcia said in his letter to shareholders that, they didn't anticipate the headwinds being as strong as they are at the moment, and they don't really picture things getting any better, probably even a tad bit worse in the fourth quarter. So he's setting the investors up to understand that the fourth quarter is going to be worse than the third quarter, and they only lost $508 million in the third quarter. And so far for the year, they've lost $1.45 billion through the first 3 quarters. And if the anticipated loss in the fourth quarter is going to be even greater,
which it will be,
they're looking at well over $2 billion in losses just in this year. And one has to wonder how much longer you can continue to sustain a business when it's losing that type of money. Now, I get that investors don't want to admit defeat. And I guess the ones that are now buying the stock at about $7 a share are the ones that are saying, yeah, maybe it goes up to $8 or $9. I can make a couple bucks real quick. But I don't see how this is going to return to anything resembling the juggernaut that it was anytime soon.
And I think from the consumer standpoint, Dad, don't expect to sell your car to Carvana and get a ton of money. The offers are probably going to be stronger at the local dealership level and things like that. I mean, Carvana, they legitimately don't need any more inventory right now, nor can they afford to overpay for it. And I think on the retail side, if you're going to buy a used car, expect to see prices go down.
That was the most interesting thing you said. And nor can they afford to overpay for it. And what they're proving is they couldn't have afforded to overpay for it when they did overpay for it. And you can't overpay for it if you don't inspect it. Or you shouldn't overpay for it if you don't inspect it. And they don't inspect the cars when they buy a lot of them. And so they really have no idea what it is they're overpaying for. And once they realize how badly they've paid for it, they don't want to spend the money it takes to recondition it to get it to the point where it should be a retail piece.
Can't afford to spend the money to recondition it because it takes away from the gross profit on the vehicle. Again, yeah.
That they don't have.
Comment down below. What do you think is going to happen to Carvana? You think they're around a couple of years from now, or do you think they've gone the way of the dinosaur? I think the brand stands. I think the brand exists. They've put billions of dollars behind it, but I don't know if Carvana, the publicly traded company, exists. They get acquired.
I think they become the sharper image of cars.
Wow, okay.
Okay. And sharper
the
image.
Circuit City of cars.
Well, sharper image went out of business. Somebody bought the name so that they could still be on the internet retailing things under the sharper image name. And I think perhaps that's what's going to happen with Carvana in the future, that somebody will buy the name and it won't really be associated with used cars anymore. It'll just be something else, God knows what. Or somebody will just buy them out for pennies on the dollar.
Could be us, folks. Could be us. Crowdfunding campaign starting soon.